Hi everyone, welcome back to Corporate Decoder, the place where we decode the corporate world, one confusing document at a time. Today we're diving into an annual shareholder report so long it practically needs its own zip code. Let's see if we can find any hidden treasure or just hidden costs. Big picture, we're looking at a fund family called Defiance ETFs. Think of them as specialized collections of stocks but with some extra gears and levers to make them go faster, or in opposite directions. This report tells us how they performed over the past year from May of 2024 to April of 2025. It's about the before channel in the link for more. First off, this is a Form N-CSR, which is basically an annual report that details what the company's been up to. It also mentions there was an amendment filed because the originals were missing some signatures. Everyone messes up. We have quite a few funds to go through, but the first one is the Defiance Daily Target 2X Long AVGO ETF. Now that's a mouthful, but it focuses on getting twice the daily return of one company, Broadcom. Basically, if Broadcom goes up 1%, this fund tries to go up 2%. Easy, right? So how much does it cost you to ride this roller coaster? For every $10,000 invested, it's about 85 according to them. That's a 1.29% fee annually. For the report mentions a cumulative performance and annualized performance comparison against the overall S&P 500, which is how these funds can either make you rich or scare you in returns. We can see that from 0821 to 729, make you rich or scare you in returns. We can see that from 0821 2000 500 would have turned into 9,000 1.29% fee annually, and the report mentions a cumulative performance and annualized performance comparison against the overall S&P 500 would have turned into 9,000 1.29 29,000. This isn't a good look for them. Looking under the hood, the fund itself is managing over $72 million, and the advisory fee total about $439,000. The portfolio turnover is 1,661%, which means that the fund is doing a lot trading to keep up. Where is that money invested, you may ask? The majority is in cash, but there is a tiny bit in Broadcom itself and a tiny amount in these thing called total return swap contracts. Overall, this fund is pretty small and its initial returns aren't great. Next up is the Defiance Daily Target 2X Long HIMS ETF. This one is all about hims and hers health. Just like the Broadcom fund, it's aiming for those doubled daily gains. These are a bit newer. Let's take a look. This fund expenses are again 1.29% of a $10,000 investment, about $15, but the returns are not great. From 03/12/2022, a $100 investment would turn to $7,852. A bad dollar investment would turn to 78 on a 5 base, while SPY turns into 99,822 $1,805, while SPY turns into $9,962. A bad look. This fund size is much smaller. At about $17.5 million, the advisory fee is only about $8,000 and the portfolio turnover is 251%, much smaller than the last one we saw. Again, the money is mostly in short-term investments, place of cash with a super tiny investment into common stocks. But the overall returns make this small and underperforming. Next up is HO like the others. This one seeks to double the daily returns, but focusing on Robinhood stock. Returns are much better with from 0310 to 1000 alpha $100 145.2 L430 80,000 and 221 at 5Y. Pretty great. What is the magic 125 to L430 at 2,220.51? And welcome back to 1 if $40 a magic 125.15 a 10 falls and $12.21 to 430 2025 a $1,000 portfolio would turn to $13.25 to 0 versus a $993.1 pretty great. What is the magic? The fund size is much smaller at almost 4 million. Advisor fees are also small and the turnover is 20%. This investment strategy is very similar to what we've been seeing with money mostly invested in cash and a small amount in stocks. Fourth, Defiance Daily Target 2X Long Ion Kiev ETF. Again, a very similar process. How is that going for them? Expenses are 1.29%, but check here. An investment of $1,000 from 0312,000 from 0312,725 would turn your portfolio into 17,500 $10 a great return. This fund is $24 million, $24,298 advisor fees with 14% turnover. The funds here are, again, mostly held in cash and short-term investments. It's interesting how few dollars it takes to achieve amazing outperformance. Next and fifth is Defiance Daily Target 2x Long Lie ETF focusing on Ali Lilly. What's the performance? Expenses are higher at 1.31%, with an investment of $1,000 from about August 2. April turns into 101.15 versus SPY being up 8%, meaning SPP dollars and 117. The returns might not be as high as that IonQ performance. 19 million fund size with slightly above $100 K total fees. The turnover is much higher at 153.2%. Again, like many of the others, most of that money is invested in cash place-hold short-term investments. There's also a little bit into total return swap contracts. Up next at 6th, Defiance Daily Target 2x Long MSTR ETF MicroStrategy, another popular one. Are people making money on this one? Expenses are very high at 130% for this fund. However, returns are high. A 10K investment would turn into 2,050.98 ADAS vs SPY only returning 3%. Wow. The fund size of the past one is huge at 1.6B, but for that, advisory fees are at $9,081,075. The turnover is also insane at over 4,000%. This fund has some interesting things: purchase call options at 11% and total return swap contracts at about 4.71%. Also some money is short-term stuff, and this is interesting since a lot of these funds had a very similar formula, but each has different risk profiles. It's quite an achievement. 7th, Defiance Daily Target 2x Long NVO ETF focused on Novo Nordisk as a DAR. Expenses are standard for this fund family, but the returns, oh man, a 10K investment turns into a measly 3,135 ADAD, a bad look. Fund size is just $3.4 million small. Similar asset allocations as the rest, but we have Defiance Daily Target 2x Long MORCL ETF. Oracle's time to shine or fall, which will it be? Expenses are somewhat higher at 1.36% for this guy. However, a 10K investment turns into about 625 VS. SB being down about 8%. Ouch! At $2 million fund with just a couple grand to the advisor, the turnover is very high. Most money is in low yield cash and short-term bonds. 9th, we have Defiance Daily Target 2x Long RGTI ETF time for an underdog. Expenses are low, 1.29%. What about the return? It's almost near last place to start off, huh? Investment turns into 113.95 VS SPY with a nearly 6% drag. Share of the portfolio composition is the same as the rest. With just being a 2M fund, not much management fee to be made either. High portfolio turnover, but not a whole lot of excitement. 10th, Defiance Daily Target 2x Long RAIC ETF. Can this turn our performance around? Expenses even lower here, 9.5, but the returns, it's the worst so far. 10K portfolio turns into 3,044 to 40s, while SPY is just down 4%, 24K fund size. Portfolio allocation is like the rest, so we will skip. Finally, a new contender appears, number 11, Defiance Daily 2x Long RKLB. We will skip total advice fees since the trend of the report and allocate of cash to other things are similar. The chart is looking great so far with 22% total yield vs the SPY, which is slightly negative. 12th in line, finally towards the Defiance Daily 2x Long SMCI. We will go straight to the return with the fact that we know the expense and ratio will be similar to the rest. The returns are looking like a disaster, with what you stated being the value on day one would be now worth 6.3% of that. We go straight to the allocation due to this fund holding the most. Do they know what we're doing, or what's the fund value looking like? Let's dive in at you 13484. K allocated, we can now rest assured where we are. I told what else could be found. Defiance Daily Target, can it redeem the bad trend? Unfortunately in this case not, but we can make it quick and say it follows what we have been seeing as well. Aiken noted we will not take that. On the completely opposite end of the spectrum, test Defiance Daily 2x Short MSTR will have quite a handful of cash to share to investors, with MSTR blowing its expectations. In this case, we have the same inverse as the others to show for the portfolio at 90 baht, while all have been on short positions. I'm finally with that. The last inverse, let's see. The report will end on this note and with only 110 pages. The returns looking like it's not doing great. Even though small at 4 millions, you would have just underperform IQ and you are finally off of financial data. This thing was endless of just allocation. Now, the boring but necessary stuff. They have a code of ethics, which is supposed to keep people honest, but who knows. They also have an audit committee financial expert, someone who knows numbers and can hopefully spot any shenanigans. All in item 4, what did the accountants get paid? Well, Cohen and Company were paid differing percentages that are disclosed in the financials for the services they provided. Audit fees were at $13,000 for the companies, XEF $3,000 in cash per company. That's all you needed to really know. Alright, so that's our shareholder report tour. A lot of jargon, a ton of fees, but some interesting insights if you knew there was all this info. So, what's the verdict? Going through all these funds, the main takeaway is that past success is not indicative of future returns, while some had amazing performances with their high risk tolerance. Many were just outright terrible. The primary strength appears to be that they're all highly specialized, so you know what you're getting. It gives investors more control over where their money goes. That said, many of the returns are not there, with some being almost near zero, while all those high fees will accrue. All these funds focus on just 3x the normal, which can be a weakness under certain market conditions. And the success is mostly riding whether you have the right guess. If I had to pick the top 3 out of the bunch, I'd most likely only pick those high alpha returns with own C as top candidates. The fees, high turnover rates are not making up for many to want to hold in the long term. Alright, that's our breakdown of this report. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.